This is Andrew Stotz of Stotz Investment Research to talk about watching the street for Hong Kong. First, let's talk about analyst consensus recommendations. What we can see in this chart is the consensus recommendations over 5 years. Analysts are now neutral on Hong Kong after 4 years of rating the country a buy in Asia. This company, YesStar, sells medical consumables and equipment in China from global brands such as Fujifilm, Roche, and it's aiming to ride the wave of Chinese healthcare growth. That's a company that has one of the most positive recommendations. On the negative side, China Huishan Dairy's chairman and majority shareholders Yang Kai borrowed money to buy back shares in 2015, which caused the share price to double in less than 3 months. So recommendations are most negative there right now. Now, if we move on to see consensus earnings estimates, what we can see from this is analysts have expected single-digit growth for the past 5 years, and estimates have been accurate with EPS when EPS has grown, but not so much when EPS has fallen. Now, we've seen this before, that when earnings fall, analysts rarely predict that, but we can see that analysts are highly accurate in Hong Kong relative to many other countries in the region in their earnings estimates. Lenovo Group's earnings are expected to rebound from loss in fiscal year 2016 as PC and smartphone shipments have started to pick up. So we can see they're one of the massive growths in EPS. And on the negative side, analysts are expecting Coolpad to have a tougher time in the mobile segment as shipments are falling and a loss on the disposal of Coolpad e-commerce. Let's continue on to consensus target price for Hong Kong, and what we can see is consensus target price expected return versus the actual return. And the gap here just shows that analysts are optimistic. The target price expected return has been double-digit year after year despite single-digit or negative actual return in the market. Consensus now expects a 13% 12-month forward upside. Wisdom Sport has a high expected upside as the share price has fallen more than 50% year to date. Now, one of the lowest consensus target price expected return, we can see again, China Huishan Dairy is also the company with most target price downside due to the price jump in 2015. Want more of our research? Well, sign up for our free newsletter at becomeabetterinvestor.net/join.